What if I told you that your bank might be paying you almost nothing, while other banks are quietly paying people 50, 100, even 300 times more on the exact same money? Right now, millions of Americans are keeping their hard-earned savings in traditional bank accounts, earning 0.01% interest. That means if you have $10,000 sitting in your savings account, you might earn just $1 in an entire year. $1. Meanwhile, high-yield savings accounts are paying 4%, sometimes even more. On that same $10,000, you could be earning $400 or more per year without taking any extra risk, without investing in stocks, and without doing anything complicated. The only difference is choosing the right bank. And the truth is, most people don't even realize they are leaving free money on the table. Banks count on customers being comfortable, loyal, or simply unaware of better options. But in today's economy, every dollar matters. Inflation is rising, expenses are higher than ever, and your money needs to work for you, not sit idle making your bank richer. In this video, we're going to break down the best banks in the United States that are offering high-yield savings accounts with some of the highest interest rates available right now. I'll explain how these accounts work, why online banks are able to offer much better rates than traditional brick-and-mortar banks, and what you need to watch out for before opening an account. We'll look at minimum balance requirements, hidden fees, withdrawal limits, FDIC insurance protection, and which bank might be the best fit depending on your financial situation. Whether you're building an emergency fund, saving for a house, or just trying to make your cash grow safely, this guide will help you make a smarter decision. By the end of this video, you'll know exactly where your money should be sitting so it can grow faster, safer, and smarter. Let's get started. What to look for in a high-yield savings account. Before you rush to open a high-yield savings account, you need to understand that not all high rates are created equal. The first and most important factor to look at is the APY, which stands for annual percentage yield. This is the real rate of return you earn in a year, including compounding interest. Even a small difference in APY can mean hundreds of extra dollars over time. But don't just chase the highest number you see. Sometimes banks advertise a high rate that applies only to certain balance tiers or requires special conditions like direct deposit. Next, look at minimum balance requirements. Some banks require you to maintain a certain amount to earn the advertised rate. If your balance drops below that threshold, your interest rate could fall significantly. Ideally, you want an account with no minimum balance requirement so your money stays flexible. Also check for monthly maintenance fees. A high APY means nothing if you're paying $10 or $15 per month in fees. The best high-yield savings accounts have zero monthly fees and no hidden charges. Another key factor is FDIC insurance. Make sure the bank is FDIC insured, which protects up to $250,000 per depositor per bank. This means even if the bank fails, your money is protected. You should also consider transfer limits and withdrawal rules. While federal limits on savings withdrawals have been relaxed, some banks still impose their own restrictions. Look at how quickly you can transfer money to your checking account when you need it. Finally, don't ignore the user experience. A strong mobile app, fast transfers, good customer service, and easy account management make a huge difference in daily use. A slightly lower APY may be worth it if the bank provides reliability and excellent support. Choosing the right account isn't just about interest, it's about flexibility, safety, and convenience combined. Best banks offering high APY savings accounts. Now let's talk about some of the best banks in the US that consistently offer competitive high-yield savings rates. First, Ally Bank is one of the most popular online banks. It usually offers a strong APY, has no minimum balance requirement, and charges no monthly fees. Ally is known for its clean mobile app and strong customer service, making it great for beginners. Next is Marcus by Goldman Sachs. Marcus typically offers a competitive rate with no fees and no minimum deposit. It's backed by the reputation of Goldman Sachs, which adds a layer of trust for many customers. However, it doesn't offer a checking account, so transfers may require an external bank. Discover Online Savings is another strong option. Discover often combines a competitive APY with excellent US-based customer service. There are no monthly fees, and occasionally, they offer sign-up bonuses for new customers. Capital One 360 Performance Savings is great if you want a hybrid between online convenience and physical branches. It offers competitive rates and integrates easily with Capital One checking accounts. Sophie Savings is known for offering higher APY when you set up direct deposit. It also combines savings and checking features in one platform, which can simplify money management. American Express High Yield Savings is another reputable option. It typically offers solid rates with no monthly fees and carries the strong brand reputation of Amex. Lastly, some banks like CIT Bank or UFP Direct sometimes offer some of the highest APYs on the market, but you should carefully check balance requirements and conditions. Each bank has strengths. The best one for you depends on whether you value the absolute highest rate, ease of use, bonus offers, or brand reputation. Online banks versus traditional banks. One big question people ask is, why do online banks offer higher interest rates than traditional banks? The answer is simple: overhead costs. Traditional banks operate physical branches, pay rent, utilities, and large staffing expenses. Those costs reduce the amount they can pay customers in interest. Online banks don't have hundreds or thousands of physical branches. Because of that, they can pass those savings on to customers in the form of higher APYs. That's why you often see traditional banks paying 0.01% while online banks pay 4% or more. Now, many people worry about safety. Are online banks safe? The key thing to check is FDIC insurance. If the bank is FDIC insured, your deposits are protected up to $250,000. That protection is the same whether it's an online bank or a brick-and-mortar bank. Another difference is accessibility. Traditional banks allow you to walk into a branch and speak with someone face-to-face. Online banks operate mostly through apps, websites, and phone support. For many people, that convenience is actually better. You can manage your money anytime, anywhere. However, online banks may take 1 to 3 business days to transfer funds to external accounts. So, if you need instant cash access regularly, keeping a small buffer in a checking account is smart. In today's digital world, online banks are becoming the smarter choice for savings, while traditional banks may still serve well for daily transactions. The ideal strategy is often to use both. Smart strategy to maximize your savings. Opening a high-yield savings account is just the first step. The real power comes from using it strategically. First, build an emergency fund. Financial experts recommend saving at least 3 to 6 months of living expenses. Keeping that money in a high-yield savings account allows it to grow while staying liquid and safe. Second, separate your spending money from your savings. Keep your daily expenses in a checking account and move extra cash into your high-yield account. This reduces temptation and increases growth. Third, monitor rates regularly. Savings rates change based on Federal Reserve decisions. If your bank significantly lowers its APY while others remain higher, consider switching. Moving money between online banks is usually simple and free. Another smart move is automating your savings. Set up automatic transfers every month. Even $200 or $300 per month compounds significantly over time when earning 4% or more. You can also use multiple savings accounts for different goals: one for emergency funds, one for vacations, one for a house down payment. Many online banks allow you to create savings buckets within one account. Most importantly, avoid chasing extremely high promotional rates without understanding the terms. Stability and reliability matter just as much as headline numbers. When used correctly, a high-yield savings account turns idle cash into a steady income generator. It won't make you rich overnight, but it builds financial security quietly and consistently. And in personal finance, consistency always wins. At the end of the day, this isn't about chasing banks. It's about respecting your money. You worked hard for every dollar sitting in your savings account. You sacrificed time, energy, and effort to earn it. So why let it sit in an account that pays you almost nothing? The difference between 0.01% and 4% may not sound dramatic at first, but over time that gap turns into hundreds, even thousands of dollars. And the best part, you're not taking extra risk. You're not investing in volatile markets. You're simply choosing a smarter place to park your cash. High-yield savings accounts are one of the easiest financial upgrades you can make this year. It takes less than 15 minutes to open an account, but the impact can last for years. Whether you're building your emergency fund, saving for a house, planning a vacation, or just creating financial stability, your money should be working for you every single day, even while you sleep. Don't let loyalty to a traditional bank cost you growth. Don't let comfort keep you stuck in a low-paying account. Take action. Compare rates. Read the terms. Choose the bank that fits your goals. Small financial decisions, made consistently, create big financial results over time. If you found this video helpful, make sure to like it, subscribe to the channel, and turn on notifications because we talk about smart money strategies that actually help you grow. And in the comments below, tell me, which bank are you currently using, and are you getting the best rate possible? Let's make our money smarter, safer, and stronger starting today.